Welcome back. Again, I'm John Shepkoff. The question that comes to me quite often is should I refinance for a better APR or the annual percentage rate? And the answer is no. You should never ever refinance your home. There are certain conditions why you might want to, and I'm going to break that down and I'm going to show you why you would or would not, okay? Sorry, I've got allergies here. Okay, but here it is this. Let's just say supposedly that you have a 9%. Now I chose that because I want you to hear it's a higher percent, and we know that rates are really good right now. But let's say you have a 9%. And let's just suppose that you've been paying on your loan, you have a 30-year mortgage, and you've been paying on it for the last 5 years, okay? The question is, and today's rates, because what you could do, let's just say that supposedly you can get a 7%, okay? So that's 2% better. So, that all sounds good, and the rule of thumb is if it's at least 1% or better, refi. That is not true. I come from a background of finance. As you know, I teach people because I teach people how to become totally debt-free. Okay, here's the bottom part. People don't get it. I don't know why loan officers don't get it, bankers don't get it. They only think of one thing, and that is what's in it for them. They're thinking they're going to say, oh yes, you should refinance. I'm going to lower your APR. I'm going to save you $300. Do you know how much money it is? Or I want you to pay off all this debt and consolidate that. Look at all the money I'm going to save you. Blah, 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 blah. And I'm telling you, you're getting ripped off. I'm a loan officer. And if you're in my area and you asked me, should I refinance? And the first thing I'm going to say is no. Why? Especially if you got my program, you're going to save your son a ton of money. You're going to save thousands and thousands of dollars. Where can you be able to pay off your home? And the average person can pay off their home in approximate 5 to 9 years. Why would you go from that of a 9% just because someone's going to give you a 7%? You wouldn't do it. Now why? Okay, and maybe when I answer the question why, this will help you to understand. There are circumstances, okay? For example, let's say you had some equity in your home and for some odd reason you were going to pay off all the debt and you needed to take money out, and I don't, that might be a good idea if let's just say you're paying out, let's say $1,000 in monthly payments on your house. You're paying an additional, let's say, $500 in your debt. Okay? And you had the equity. Would it be a good idea to refinance if you had it? Yes. Only on condition, number one, the $1,000 plus the $500 in debt, you paid them together toward the mortgage. Absolutely, I agree with you. 100%. Anybody out there? Yes. On the other hand, if you do not and you're just trying to save yourself some money, no way, I wouldn't touch that with a 100-foot pole. Okay? You're going to lose too much money. Okay? So what would happen is, if you're on my program, and by the way, when you're on my mortgage program, you are in 100% control of this. You decide how much extra you're going to put toward the principal. I encourage you to get down on whatever it takes and figure out exactly how much. If you have to skip a couple going out, do it. If you have to give up a few items a little bit, do it. If I'm telling you, the more, and you would be surprised if you just watched where you spent your money and you put that extra money toward the mortgage, you could pay it off even faster. Okay? Because you already know that you're getting 90% of the money going toward the principal. And my friends, that is a tremendous amount compared to 30%. That's 60% more money going toward the principal. or you can say 90%. However you want to say it, they still mean exactly the same. 60% more going toward the principal, or 90% going toward the principal. It's a lot. It's huge. It's humongous. You should be jumping on it and getting the program so you can get this house paid off as quick as possible so you can be debt free. It's important, okay? So if you were to consolidate, make sure you pay the total $1,500. So you have the $500 for the debt, the $1,000, you put the two together, it's $1,500. And let's just say your new payment, let's just say it's $1,200. You're going to make up the difference, and you're going to put the whole $1,500 plus whatever additional amount of principal going toward the mortgage using the coupon. It is so important that you do that. Now, why is that? Okay, now I told you I'd tell you that. Okay, I don't have my calculator in front of me. I'm just going to do some quick numbers in my head, and that is this. You have $100,000. You've had it for 5 years. Drops it to a 25 years. You can't recap the amount of money that you lost. You can't do that, okay? The amount of money that they're going to charge you, which is, what's called the APR, or the stuff that goes on top of the loan. So they give you a 6%, and then they charge you, let's say $5,000. The $5,000 goes on top, and that gives you that APR, your annual percentage rate. You heard me talking about that, and that's going to start the process all over again. Okay, well, here's the problem. You've got $5,000 plus the amount of time that you lost, plus the amount of time that you're going to be into the loan. All I can tell you is if I put the whole thing together, you will be out about approximate $25,000, maybe $30,000 when all's said and done. In the whole, if you looked at the whole picture of what you're doing, you have to look at everything. Don't just listen to the loan offer that says, I'm saving you $300, or I'm dropping your interest rate from a 9% to 7%. No. That's not correct. The correct thing is you've got to add all the numbers. You've got to talk about the numbers at the very beginning. You've got to talk about the numbers starting over. You've got to talk about the money that wasn't paid. You've got to talk about the amount of money that he's charging on the loan. When you add all that in, it's not $5,000. It's about $30,000. Trust me, it's about 5 times the amount, maybe closer to 6 or 7 times the amount, whatever it is that he's charging you. And I don't care if he says it. The only way you would do this, there's exceptions. There's always exceptions. You have a 9% interest rate, and they're going to do the closing costs. Okay, they said they will pay for it. So in other words, you owe $100,000. They're not going to raise the loan, not a single penny. So you owe $100,000. You have a 9%, and he says, I'll tell you what, we're going to give you a new loan at $100,000. We're not going to raise the loan, and you make sure if you owe $100,000, you still have $100,000. And they're going to draw, instead, let's say they're going to give you a 6%, but because of you don't want to pay for any of the fees to add to the loan, they'll say, well, okay, we'll give you a 7%. So it goes from 9 to 7%, right? Now that I will agree with, 100%. If he dropped it from 9 to 7, he never raised the loan. He never did anything. Now your tax insurance will change because you're going to start over. And again, if the loan officer is telling you, what, that doesn't, he's lying again. Okay, because depending on what month you're on, he's either going to collect 7-9 months of taxes or impounds on that. So there's no such thing as a free lunch. Trust me, they all make it sound like it's all free, but it's not, okay? The true way is he does not raise the loan, not a single penny. He reduces your rate down. So if he drops it 1 full point, absolutely, jump on it. And, here's the part, and, so if you had a 30-year loan, you owe 25, right, on it, what does he got to do? He's got to drop it to a 25 years. Not a 30 years. We don't want to start over. We don't want to play that game anymore, okay? You have to make sure that he gives you a 25 years and not a 30 years. Because if he gives you a 30 years, you just shot yourself in the toe again. I don't even care if he did give it to you free. You just shot yourself in the toe. So what you do is you tell him, okay, Mr. Banker, okay, I agree on it. Just make sure you give me that 7% at 25 years, okay? So in other words, he keeps it. So if you want to reduce it a little bit, that's okay, okay? But whatever you do, do not start over. If you don't start over, you're going to be fine. But that's the biggest part where people make the mistake, is they say, well, yeah, I'm getting a loan absolutely free. Okay, that's great. He said that he won't charge me any, he won't raise my loan. And you know, so if you owe 100,000, it stays exactly 100,000. You will have to start your taxes, insurance will have to be started over. You can't get around that part. So you're looking at anywhere from 5 to 7 months. He's going to add impounds to that account. You know that already, okay? Because he's starting it. Every loan is a brand new loan. I don't care what they say. It's a brand new loan. And unless you do what's called a quick refi, and there's very, 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 very few banks that do what's called a quick refi. Is it possible? Anything's possible. Means they don't do anything. They just actually change the rate, and it just doesn't. The banks just don't do that anymore. They won't do it. They just won't. So you go from he gives you a 25 years. He doesn't raise the loan up. He goes from a 9% to a 7%. Absolutely, all day long. Great. I agree with that. If you do anything differently, you just shot yourself in the toe. So that's the norm, how you want to do that. You want to make sure. Please give me a thumbs up that you saw this, you like this, okay? Tell all of your friends, because I want them to learn, okay? This is pretty much a word of mouth. And of course, anybody that joins that you personally tell, guess what I will do? I will give you $100. I'm very, very good about giving out my referral fees out. I'm very good. You can see that the program that I charge, when you go on there and you charge, I charge very little, okay? I don't make a lot of money. I'm not here to make a lot of money. I do make some, very little, nothing to brag about, nothing to boast, nothing to write about, okay? And I'm very generous about giving referrals. Why do I do that? Because it's something that I didn't have to do, and I want to reward you, okay? Again, I'm John Shepkoff. Please give me that thumbs up that you liked it, okay? I need all the help that I can through all my friends, okay, that are doing this. And of course, this coaching and mentoring training is absolutely free. I'm not charging you whatsoever. And of course, if you're ready, go up there and you want to, click on the coupon, the program, which one, whether you want the mortgage or you want the consumer debt or you want all three of them. You're going to email me back that you either got one of the programs. I'm going to give you instructions, what you're supposed to do next, that gives right to your bank. And it's very simple to do this. Very, very simple. Again, I'm John Shepkoff. Talk to you real soon.